Good day. My name is Nkosana Nzima, and I'm a global fund specialist representing Momentum Global Investments to the South African market. A point of reflection is a good starting point, as I would have presented the results to the end of June, 3 months prior to this. Everything was pretty much red and in negative territories. And I remember mentioning that the S&P 500 had the weakest start to the year since 1974. Global bonds had not offered any protection during that period. Although we had a very strong July month after the previous update, the remainder of the quarter proved to be very much challenging. Developed market equities and bonds realized further losses, and emerging markets did not do better either. There were very few places to hide, and diversification has not yielded any results in this instance, as seen in the traditional 60-40 portfolio returns. Looking at the portfolio returns, as shown in the asset class returns, in absolute terms, it's been a bloodbath throughout the portfolios. But in relative terms, the portfolios are doing well, and we believe are well positioned with the recent additions to the portfolios. Looking more closely at the Momentum Global Cautious Fund, the fund does have a slightly higher weight to growth assets than most of the funds in the category. And as a result, we have experienced bigger drawdowns than other funds because of the bigger sell-off in growth assets year to date. Although the slightly higher allocation to growth assets has caused pain in the short term, the marginal risk taken is well rewarded in the long term, and the fund is likely to benefit more than its peers from a market recovery. Thus, the client should be comforted by the fact that the portfolio has held up well over time and has gotten clients through other crises like the global financial crisis and COVID, provided they had stayed invested throughout the period. Now, looking more at the Momentum Global Managed, as I've shown in the prior numbers, diversification has not yielded result in this instance, and the 60-40 portfolio has struggled as a result. The fund does have a higher allocation as well to growth assets than average fund in the category and has struggled slightly in the short term, but well positioned for a market recovery. Now, looking at the Momentum Global Growth, the fund has had a strong September in relative terms and is currently in the second quartile on a 1-month basis and doing well in long-term numbers. Just as a reminder, these returns would have been filtered through to the rand-denominated feeder funds in which they mirror. However, the US dollar appreciation would have erased some of the losses suffered in the hard currency fund. Now, moving on to the outlook and what we're doing in the funds, we still believe diversification is the only free lunch in investment management, and we continue to use it by diversifying our diversifiers throughout the portfolio. Our inclusion of private equity in the portfolios gives us access to a lot of exciting companies and opportunities that we would not necessarily have access to, and to get to benefit from the growth of these companies. We continue to blend equity styles across the portfolios to be well positioned for different market cycles, and we have been well compensated for it so far. Thank you.